Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, metal traders. Ira Epstein with your metals market update for this Monday. And we're now at the 19th of November, 2018, just after 1:50 p.m. Central Daylight Time. You're looking at approximately the settlement prices in just about most of these metals now. The dollar was down again, as you can see today, giving a bit of a prop here. The problem, of course, has been, if you looked over the weekend, Vice President Pence was at the APEC meeting with the Chinese president, and there was no real getting along. If that is a lead-up to the G20 meeting at the end of the month between President Trump and President Xi, not going to be a very pretty subject. You just never know. You don't know who's being hawked, what they're doing, how they're setting it up, and what those messages are meant to mean. Are they meant to mean what you sent us in that document of your offers is simply not enough? Is it meant to mean I'll be the bad guy, President Trump will be the good guy? Can't play it. The stock market doesn't like it. It would be able to overcome Apple, Boeing, all those things. It's not. The market didn't like it. Another market that didn't like it was soybeans, one of the big export items there. I could argue that hogs are up sharply today, and that used to be an export to them. You don't know. On the energy sector, it's looking like this market's fishing for a bottom. That doesn't mean you can't still make lower lows, but the pizzazz, the oomph to the downside seems to have dissipated. Word is that Russia's now going to join in on December 6th and talk about signing that oil contract with OPEC. We'll see what happens there. Gold on a weekly chart. You know, I was just looking before I even did this at the seasonals in gold and what happens normally from the 6th or 7th of December on. You might want to go look at your seasonal charts. I'm going to put together another gold report for my clients, and I'll be showing them that. But as you can see, the market had a successful test back here of the 18-week moving average of closes, and since it has come up a bit. When we look at the chart, I can see that you're still in a wave to the downside, but if you take a look at this nearby wave, and I'm going to come back here one chart, you look at it this way, you would not see, unless you use swing lines, that the market has got a pattern of higher lows and higher highs. That's bullish. The market is fighting its battle and closed over today that 18 and the 100-day average in green of moving average of closes. That is bullish. So now, to break this pattern, you've got to get back under 1207.10. And what was resistance on the way up is temporarily support between 1219.70 and 1222.60. Will the market make a run up is the question. It's had little problem in breaking down. Now the question is, can it get back up to an upper Bollinger Band? And yes, you did that back at the beginning of October. So what I have on the chart now is measured by slow stochastics. I've got momentum pointing to the upside. You can see that they're pointing up. I've got the bias up because the settlement's going to be over the 18-day average of closes. I don't have a key moving average over the market, which is good. And if the market decides to run, a potential target could be the upper Bollinger Band at 1244.20. When I look at the ETF GLD, I've got the same pattern, so one's validating the other. I've got higher lows, higher highs. Looks like, and I can't tell you it's going to close over the 18-day average. Remember, futures prices settle at 12:30 Central Standard Time. The ETF's 3 o'clock Central Standard Time. So we're waiting to see where that settles, but right now it's looking like it's going to close over that. GDX, the next resistance points are the 100-day average at 1974 to 1981. Unlike the futures and GLD, it's not a trending market. The last rally high was right up here, and if we come back, you can see that exact high is right there at 1980. We have not yet even taken that out. We've gotten up today to 1966 so far, and the what was that high is now the 100-day and the upper Bollinger Band. I would expect to see pros coming out of the market up there if they're in it. In the gold-silver ratio, I'd like to see this number get under the 80. That would accompany a move in base metals, and at some point, if the dollar is peaking out, and there's some talk of that, then that could set up the inflation scenario down the road. Now, silver took a long time, but it has worked its way from falling apart under the lower Bollinger Bands 3 days in a row to getting back over it, and now climbing back to neutrality. That 18-day average of closes, what I call that line in the sand, and it just sort of stopped there when it hit it. When we take a look at copper, you've got a pattern of a lower low and a higher high. What's interesting about copper is the market's not backing off even though nothing went well at that APEC meeting. In the platinum market, you have a pattern of a higher high, lower low, fighting its way, clawing its way actually, back up to the 18-day average of closes. No trend, but it's got the bias up, and momentum looks like it's trying to turn up. And then the strongest of the markets had been the palladium. To see it get under the Bollinger Band after 2 days over it, you should not be surprised. That doesn't mean that trend is ending. It's just that 95% of the time it'll trade within these black bands. And if we take a look on Friday, you were up and over it, and you were on this day at 1347.40, which was, if I'm correct, just under that upper Bollinger Band. So you had 1 day over it, now you're back under it. It's called riding the band. And you have to watch and keep your eye on slow stochastics to see how do they correct being overbought. They can either embed where both numbers go over 80 for several days, not even close to it, or the market gets a price correction and then it heads down again, and that might lead into prices backing off towards the 18-day average of closes. A market that has turned bearish, yet unusual word, right, is the dollar index. Lower highs, lower lows. You know what's happened in the 10-year yield? I don't know if you've been paying attention. Remember, that was a number they were talking going 3.25%, 3.5% by year end. You're down to 3.06%. And with that lower yield, you're seeing this market also fall back a bit. If it continues down, 95.67, the lower Bollinger Band's in play. You have momentum down, not oversold, bias down, trend down. Everything looking pretty bearish on that. I and my firm will be writing on these currencies, the metal markets, and so on. If you'd like to get our information, simply give us a call. You can go to our website, or you can go to our website and sign up either for the Linn Research and or my own copies of that. You can click right up here, take a look at it. I'm starting to write another gold report, so you might want to get online to get these. I don't send them to people outside of our list, and I do cull that list. I'm Ira Epstein. You have a good day. Talk to you tomorrow.